Welcome to another episode of the Am I Rich Yet podcast, a weekly podcast for millennials and Gen Zs where we help you save, spend, and grow your money smarter. Welcome to episode number 25, where we will be covering random questions that our viewers and listeners sent in. My name is Georgia. I'm one of your co-hosts. I myself am a Gen Z, currently studying my MBA and navigating my personal finances.
My name's Rob. I am George's dad. I'm a recently retired financial advisor, and I am here to help you make smart decisions with your finances.
Welcome to Am I Rich Yet? In the spirit of asking each other questions to get us into the podcast episode, I have a question for you.
Sure.
What is a secret skill or talent of yours that maybe no one knows, or maybe just majority of our listeners or viewers might not know? And can we monetize it?
My secret skill is, believe it or not, I'm in the 0.4% of the world in spatial skills. And I haven't monetized
What
it.
does that even mean?
It means that I'm really good at packing things. I'm really good at organizing things. I can just walk in and see what's right and what's wrong. And I don't know how, it just comes easy to me. It's like brushing your teeth. It's that easy for me.
And did you do a pop quiz?
Some people have even a dishwasher, how to load a dishwasher. Half the world's population has no idea, and some of them are in my family that have no idea how to load. Like I came in last night, there was still like 8 dishes, and the dishwasher looked completely full. A couple minutes later, I reorganized it and everything fit in. So that's my skill set.
How did you find it out?
I had done this test many years ago, and it showed that I just had this really unique ability. Yeah,
Nice.
there you go.
What's your question for me?
So you've been in Australia now for over a year. You're headed back. The home was stretched till November, December.
Mm-hmm.
What's the one thing that you haven't done that you want to go and do before you leave?
This is easy for me, and I might not be able to do it, but I really wanted to do the Sydney Marathon, and after my hip diagnosis, which we talked about in earlier episodes, I ended up having stress fracture, and I had to say goodbye to my Sydney Marathon entry ticket, which is a heartbreaker. But there is a Olympic distance triathlon in Noosa called the Noosa Triathlon. It's known as the world's biggest Olympic distance triathlon because there's so many participants in it. And I, again, luckily got into the race, and it's at the end of October, and I'm really hoping I can heal my body so that I can do that.
Okay.
There we go.
And I have absolutely no interest in participating in anything like that.
And that's what makes us different.
What are we covering in today's podcast?
So like we said, we've generated a ton of questions from our listeners and viewers, and most of them fit into 12 main categories, but there were some really great questions that just sat outside those categories. And so we're going to be covering them today in a rapid fire style.
So let's go through the first 2.
This is a bit nerdy and probably more specific to me, but should I think about diversifying investments away from the US with everything going on in the world, potential change to taxes, general rhetoric surrounding the US with Trump in office, etc.? And question 2, what is your outlook on the US stock market as a whole right now, given the political instability? It seems like investing in the stock market is getting to be more and more luck than it is by researching stocks, ETFs, and making good, educated choices. It feels like the stock market is still there to benefit the elite of elites. Think of all that insider trading that happened while Trump was announcing and repealing tariffs. What would be your set it and forget it advice in investing your money?
So both questions are pretty similar. There's some things going on in the US. Should we be investing? The second question gets a little deeper. Is the stock market rigged is the question. And it appears to be only for the elite. My first thought is these are the types of questions as a financial advisor, that's how your meetings typically start. So we'd have a discussion, how are you doing, what's going on? Rob, boom, they'd drop one of these bombs. And initially as an advisor, you try and answer it and try and push it away. But Yeah, there is a lot of chaos in the US. There absolutely is. No one knows what this guy is doing today, tomorrow, or next week. And he keeps changing his mind. So it's hard to figure that out. But it's not hard to figure that out if you don't have to worry about it. And what I told you in a previous podcast is don't worry about it. Are you going to pull out of the US from investing? It's 60% of the world's stock market. Some of the absolute best companies in the world are US docile. They're global companies in that their product is sold around the world, and you're going to get out of them just because the president of the United States. That's where you make mistakes. And your best thing is pay attention to it, but you can't build an investment strategy around this kind of stuff. So you don't. Stay globally diversified. And you're going to own all the competition. You're going to own companies from other countries around the world. One will benefit, one will fall behind. You can't figure out which one it will be. It's like AI came out and it appeared that chat had the market, NVIDIA had the market on this whole thing. And then suddenly China comes out with a product, a competing product months later that may be even better. So you just don't know. And if you keep trying to figure all this out, that's where you're going to make mistakes. So I had a lot of clients, a client would come in and say, Rob, I have a lot of real estate in my portfolio. I don't want any real estate in my portfolio. And guess what would happen? Over the next 5 years, real estate would be the best performing asset class. And I would get fired because we had underperformed. And so I learned very early on, I don't let my clients pick and choose which asset classes we're in. We're staying diversified, we're staying global, and you're going to own a bit of everything. So that's my philosophy. That's how you build wealth. When you start excluding, that's when you make mistakes. The next question is, can you predict the direction of the stock market? You can't. You have no idea. Just because the US economy may be struggling, the US stock market might have its best year ever next year. That's not a prediction, or it could have its worst year ever. You don't know. So don't try and play that game. Again, that's where you make mistakes. Back to what I've said before, no one knows what the direction of the market is.
Yeah.
A lot of people will tell you, and someone's going to get it right.
Yeah.
Rarely will they get it right. Oh, there you go.
So the set it and forget it advice that writer number 2 says would be diversify and don't base your investments off of.
That's probably not what you wanted to hear. Maybe you thought I was going to give you some hot tips.
Yeah.
My hot tip is ignore all the hot tips. They just get you into trouble. If you stay 100% to equities, globally diverse, you're going to have a great return. You're going to have a great investment experience, and you don't need to play with it.
Let's move on to the next question. Best saving mechanisms. Given current market conditions, what are the most effective ways to save money right now? And another question similar, investment opportunities. Beyond traditional markets, what are the promising investment opportunities? Or where are the promising investment opportunities?
So this is what's interesting to me. Everyone's always looking for the next shiny new object in investing. And there's a lot of people who are paying a lot of money to come up with those shiny new things.
Yeah.
Most of them are really difficult to understand. They're much more expensive than the traditional markets. Traditional markets you can buy today for next to nothing. There is nothing wrong with owning the great companies of the world. And really that's what you're doing when you're buying these publicly traded companies that are great businesses. The more valuable they are, the more you're going to buy. You're going to have more Apple than Canadian Tire in your portfolio. And that's where you'll participate in the growth of those companies. And if Apple starts coming down in price, you're going to have 3 other competitors. You won't have as much in them, but as they start to grow, that value will grow along with it.
Yeah.
So really different. Don't keep looking for something new. I used to think that was my job.
Yeah.
What's new? What's hot? It really is. That's what fund companies will do. Every time there's a hot new trend, a fund company's going to go launch 3 new products related to that trend. And they lure you in. And the weak advisors in the world will lure you into those products. And you'll lose your shirt. Avoid them. 1 out of 3 might work. 2 out of 3 are not going to work. So always put the odds in your favor.
Yeah.
If 67% of strategies don't work, Why would I invest in that
Yeah.
strategy?
Yeah.
I need to ignore it all.
And
So,
this has been the rhetoric of all our episodes, that stick with what's proven and don't try to make this more complicated for yourself than it needs to be. Next question here. The psychology behind spending. What are some studies of what people spend the most on? Example, ever since I stopped spending money on alcohol, I've seen a huge difference in my spending.
so I did a little research on this one. The first one was pretty obvious. I knew that. Housing is 30 to 40%. 40% in the bigger markets like Toronto, Vancouver, etc. If you're in some of the big US cities. It's more expensive to live in New York, LA, London, England, whatever. And Toronto and Vancouver are global cities. They're not just, they're still Canadian, but we're the third biggest city, Toronto, in North America.
Yeah.
So it's up there. After that, it comes to food, dining out, including food delivery apps. That's where a lot of that money goes.
Yeah.
Food and shelter. It makes sense. I think your generation is way overpaying for food. They're doing it for convenience purposes and to make their life easier, but it becomes very expensive. And frankly, you just don't have enough income to support it. So I'm going to touch on this later, but you have three choices. You can live above your means, which means you're spending more than you're making. You can live within your means, which means you're spending what you're making and maybe some savings. Or you can live below your means, which means you're not spending everything you're making.
Yeah.
Which choice do you want?
For sure within and ideally below.
Right?
Yeah.
But so many live above their means. And you can't afford some of these things. Maybe at someday in the future you can.
Yeah.
It's a Modern Family. What was that thing when Manny was commenting on he was used to staying in 5-star hotels and suddenly he had to stay in a 3-star hotel. And he made the comment, there's a big difference between a 3-star and a 5-star hotel. You can't afford 5-star. Your generation can't yet afford 5-star hotels or 4-star hotels. So back it off a bit.
Yeah.
There'll be time for that,
Yeah.
right?
Yeah.
Plus, if you start in 5, where do you go?
For sure. That's been a big kind of rule or lesson that I've grown up being taught about. For example, and this is a very trivial example, but it relates. Like, I wasn't allowed to wear makeup till I was a certain age, and I wasn't allowed to get my ears pierced until a certain age. And I like that idea of waiting till you get everything. If we're in our mid-20s and staying at 5-star resorts and eating at Michelin restaurants all the time, then what do we have to look forward to? There are more creative things that you can do with your friends and partners to probably create better memories.
Or $700 purses.
I still stand by that.
A couple of other things that you're spending your money on: technology, subscriptions. We've talked about that. Travel experiences, Airbnb, concerts, festivals, fashion and apparel, health and wellness, social spending. When you start putting it all together, it's really easy to see why people are living beyond their means, because they're trying to keep up with all of that. We didn't have as many things to do.
Yeah.
A case of 24 beer was under $20. Life was a little easier then. And we were pretty happy with just a case of beer or a bottle of rye.
Yeah.
Like a bottle of cheap wine, Matus or something like that. Whereas your generation, you've got fancy tequilas and all kinds of things to consider. What's next?
Are my management fees worth it? My investments are with CIBC Wood Gundy, which obviously comes with a management fee. So I'm curious if I'm better off just sticking that money into some indexes and avoiding the fees that come with portfolio managers.
CIBC has some great advisors, so I can't speak to who the advisor is, whether they're any good. If they're just doing portfolio management for you, you're overpaying. If they're doing planning for you and portfolio management and looking at your tax return and you got a financial plan they're working on, then it's worth it.
And we talked about this in a bit more detail in our previous episode. Next question. If I've inherited quite a lot of family money, how would you go about spending / using it in a relationship setting? Say I want to buy a house with my partner down the line. If I would be able to support the purchase on my own, is that something I should? If we travel and I can cover the costs, should I, or should they still cover his costs as an individual?
So my first reaction is, if you've got a lot of family wealth and you're getting into a relationship, you should look at a contract of some sort, a marriage contract. Because if you start, so let's use an example, Georgia. Let's say you had $1 million and you're in a new relationship, and before you know it, you've been living together for a couple of years, and you take half of that million and you put it into a house. That's now a joint asset. If you have a contract, a marriage contract, that asset needs to get paid back. It's tough to get into a relationship and have these sort of things, but if one side's got a lot more money, they've got to protect that side. You always have questions from clients that say, I'm worried about this relationship that my child is in, and I'm worried that I'm going to be giving some of our family assets away to a person I'm not really even that fond of. And so you've got to protect yourself. It's just, someone worked hard for that money, you've got to do your best to protect it. That doesn't mean you can't buy the place.
Right.
It's just going to come with a couple of strings that if something fell apart, that money gets paid back.
Now, I'm going to push this a bit further because I actually know where this question is coming from, and I don't think we exactly nailed it. So say this person is 26, dating someone for, let's just say, a year. This isn't the scenario. I'm making it up within reason. Dating someone for a year. This person received $100,000 from a family member. She has that money in her bank account right now. They're both working jobs that make the same income, and they're young, they're 26, they want to travel, they want to live their life. She's writing in here saying, should I be using that money so that we can go on nice trips or any trips? Because without that money, we wouldn't be able to travel, and she doesn't want to go just spend it on herself.
So let's go back. So we're going to live beyond our means for the next 5 years, get used to that lifestyle.
The money goes away.
And the money's gone. And then you can't live beyond your means. Just to make ends meet, you're going to have to live below your means.
Yeah.
I don't recommend that. You've got $100,000, put it to good use.
Yeah.
Put it to tax savings, things like that.
And your answer has nothing to do with her and the partner. Your answer would be the same if she was just asking, should she spend all the money on herself anyway?
Absolutely.
And something you said earlier, and given we've had a number of questions about inheritance, you said if you have received a certain inheritance, you should have an advisor and someone helping you manage that. And I think for the reason you just stated there, you could run into a scenario where you get comfortable living beyond your means, or you make a careless expense and purchase some things that aren't really important. That's why having that advisor would come in.
There's lots of reports that the people who win lotteries go bankrupt very quickly.
Yes.
Because they live beyond their means. They've just won the lottery. You put it away and you live off the income. And so what often happens, and this happens quite a bit, is if the money came too easy, it goes out just as quickly. Because they didn't have to work for this family money. Mm-hmm. Which is why I'm not a big believer in giving your kids too much money. Mm-hmm. Maybe when you're dead and gone, that's fine. Mm-hmm. But that comes later in life. You're too young to get a big inheritance right now and kill your ambition. I just don't think that's the right thing to do. I gotta give you a little bit of help here and there, but too much is too much.
And again, some people are in situations where maybe a parent has passed away young, and I think things that happen, and we've given the answer for.
And all the reason, keep the capital intact, live off of some of the income, okay? Next up.
Next question. Preventing future crises. Are there other markets showing signs of heading towards a similar situation as the 2008 U.S. housing collapse?
And there's a couple more questions that follow. Market vulnerabilities and future outlook. Identifying vulnerabilities. People like that word. In your opinion, what are the key vulnerabilities?
We're so vulnerable.
You are. New tech and market bubbles. Is the new tech sector in a bubble? And more broadly, do you see the current market as overinflated? Stock market outlook. Is the stock market still a good investment?
Yeah.
And what types of funds?
There's about 5 more along.
In my first 10 years, I used to give an opinion on that stuff.
Okay.
Very quickly, after 10 years, I got re-educated and learned that I can't predict the future, so why should I have an opinion? All I'm going to do is distort the advice I'm giving to my client. No one actually knows if the market is overinflated or underinflated. Sometimes the market booms. The bull market goes on far longer than people think. Sometimes the bear markets are far shorter than people think. And so you can't build an investment policy statement or a strategy around that. So what is an investment policy statement? First of all, decide on what asset mix you're using. I'm recommending 100% equity. Number two, what's your time horizon?
Before we go on, what is this investment policy statement?
Think of it as a blueprint.
A blueprint for your personal investments?
Absolutely.
Like a plan.
A good financial advisor will give you what's called an investment policy statement. I think of it as a blueprint. If you're going to build a house, you're going to want a blueprint. How does everything work? The electrical, the engineering. You don't want the stairs to be collapsing partway through your build.
So it's like your investment plan.
Exactly. And if you've got one, you just stick to it.
Yeah.
So what's your asset mix? What's your time horizon? Are you saving for a house? You may be saving for an upgrade. Maybe you're saving for a cottage, or you're saving for retirement. What types of investments are you going to use building it? Like a house. What type of ingredients are we going to use? Are we going to use AAA or AA or single A? What types of investments? And then what's your expected return from that? Today with technology, you can build a very simple investment policy statement on one page with all those things. Once you've got it, you don't deviate from it. You stick to it. That's how you become successful financially. If you try and build an investment policy statement, I'm worried about this, what's happening here, that doesn't work.
Yeah.
It doesn't work. I know it's going to take you time to realize that I'm right on this, but I know I'm right. Okay. We have one more podcast to do. Georgia, this is exciting.
Damn.
Number 26, same age as you.
Number 26, we're going to be talking about insurance and final thoughts. So, yeah, main lesson to take away from today's episode, stop trying to beat the system. We've talked about this through and through. Diversify and stop trying to beat the system. And thanks again for joining us on another episode. We are excited to talk to you guys next week in our final episode. Thank you.
Thanks, everyone.